step into the game. We're talking wood and grain. Charles bring the heat on Southern Yellow Pine. Mascot U.S. species, all is on the line. Drag with the spruce, keeping knowledge defined. Ashen moderates, drop the facts in the booth. We on the buy, the sell ain't no hidden truth. Economics and trends, we got it all so clear. Lumber Word Podcast, best believe we're here. If you want to make more, get in on the score. Join us every week, you'll be hungry for more. Love a been keen, though. Whoop made known. Such rain, Charleston, slide, plum, ram, known. Open to the scene, with the lumber supreme. Charles laying down facts with that southern yellow bling. Mac got that U.S. swagger like strong timber beams. Greg's insights on spruce, rewrite the themes. Got the buy side talk, we stacking that flow. Selling knowledge, every week we still a show. Join the Lumber Word crew, let your business grow. For the sharpest minds, is what a place to go.
Hey everybody, welcome to this week's episode of the Lumber Word, episode 171. Working it in before Matt takes off on the big airplane somewhere. Kip Fotheringham. Kip, man, I got you last minute. I appreciate that. And you look like you got some serious sun somewhere, man.
He's been swinging a golf club, I bet.
Yeah.
I bet he's been swinging a golf club.
Yeah.
Working in the fields, boys. Working in the fields.
No, you're out on the silo.
Isn't that a lyric from Bruce Springsteen? Yeah, I think it is.
You tending the crab nets there, Kipper?
Oh yeah.
Hey, so real quick before we start, I had a request from my wife to give a shout out to the Portland Airport, which she flew through yesterday, and said it was an amazing tribute to our business with all of the forestry type of, how can I put it, Matt? When you walk through the different parts of the airport, it's basically trees and a tribute to the Pacific Northwest and how well they took care of her when she got off the airplane, and her mother and her sister. And my God, the Portland Airport must be truly amazing. Matt, do you have anything to say about that?
I think, after you dump $4 billion into it, renovating it, it should look nice. But the Portland Airport's kind of a sneaker airport. It's actually one of the better airports that you'll travel through in the United States. And I've flown a lot, so I'm saying that from experience. But I do like the Portland Airport. And they've kept it, that's sort of been for the Portland Metro government, the Portland Airport has always been their crown jewel. So they've always kept it up to date, and it's easy to get in and out of. It's not a huge airport, but you can still fly internationally and whatnot. I mean, great for me since I live here. But I mean, if you're in Chicago, you're not going to go through Portland somewhere, right? Unless you're going to Japan or something.
Well, it does. So, her sister-in-law is in Bend, so there's no direct flights to Bend. So you've got to go through either Salt Lake City, Denver, Seattle, or Portland.
Yeah.
And then hold on. Let me just check that off real quick here. Yeah. That I said that there. And also, Mike Wisniewski called me this morning from the Southern Yellow Pine FC Stone Westline Capital event going on in North Carolina. And they had a person at the show there, and they're like, "Hey, we don't know you. Nobody in this industry knows you real well. How did you find out about the Southern Yellow Pine event?" He goes, "I heard it on the Lumber Word." So thought that was kind of cool. And, at least Mike tells us. I think there's a lot more of that goes on when we have other people on here, but that's what it's all about. So kind of wanted to jump into it. Did anybody else have any other shout outs or recognition they want to give to anybody?
No.
All right. Well, let's jump into it here. I think kind of if you've been listening to the show the last 3 or 4 weeks, probably
You'd be long.
You would have been long 3 or 4 weeks ago. And am I correct in saying at least on and probably items. So I mean, I could speak on the spruce side of things a little bit. Probably at this point, if you're not covered, Greg, how far out are you saying at this point on spruce?
You should have 90 days of inventory. 90 days, or as much as you should be, as long as you can be.
Yeah, I mean, right now it's a lot harder calling spruce mills up right now and trying to buy something. Certainly a lot different.
Matt, what inning are we in?
First.
Whoa.
Whoa.
First. Wow. I was gonna go, hey, it's the top of the third. I'm just getting to my seat. And you're like, you came in early. You wanted to get the free bobblehead, right?
Well,
I mean, there's still mills out in the West that are offering me prompt wood, and there's some mills in the East that are offering me prompt wood that they're taking counter offers on. So it's not a universally accepted idea, and I don't think that the customers have a lot of inventory either. So I say we're like in the first, maybe we're in the second inning, but I don't think people are even aware. I think the futures market is the front runner. Like it's rallied $30 some here in the last 2 weeks, and that's catching people's attention now, and that's allowing the mills to, try to firm up their prices on 2x4 and 2x6. 2x6 is still the front runner which is kind of funny, right? 2x6.
Now we're getting toward the end of
dimension.
We're getting toward the end of that 2x6 cycle where it really makes that push and goes a big premium. You just said something. I think we've been doing this for so long. I don't think I'll say how long, because it's a long time.
How long is too long? Come on.
Between the four of us here, we got some time under our belts, man. Right? Maybe if we added it all up, it would be
old. Is that what you're saying?
Yeah, but hey, even Mozart had 3 more frickin' symphonies under his belt, right?
Yeah.
I still think we've got that in front of us. But you made a good point. I guess I'm pounding the table because I see it, but I have to agree with you. I don't think as many people. There's some pretty astute buyers out there that are picking stuff up and buying stuff, but I think there's going to be some people probably surprised. So, Kip, I got that report you sent, and you were talking about stuff. A guy I was talking to today from Arkansas up to Indiana, they paid $4,000 to haul a load of pine up. How many loads of pine do you think you can haul up from the south to the north at $4,000 with the 22,000 feet? So what, from where you sit at the trading desk and from all your connections, what's your feeling on stuff out there, Kip?
Well, I don't want to say we're old because that's that'd be wrong. But I think that you and I met each other in 1992 at a NOLA conference. So
we did.
Seems like just yesterday. Seems like just yesterday.
Yeah, it was just the other day.
The other day.
But a couple things. I mean, one, obviously, on the bullish side, the transportation thing is certainly on the yellow pine side. I mean, Beam could talk a little bit more on the Pacific Northwest. In Canada, it's 80% rail going to the US, 20% trucking. But on yellow pine, it's the other way around, right? And is that a systemic change in the trucking market? I mean, forget about the diesel and all that stuff. That's a concern, because what it does is it makes the guy who has the wood on the ground in Dallas, like Beamer or you guys, the market is regional now, that you cannot go, I think Charles said it the other day, getting wood from Alabama to his facility, all of a sudden it really wasn't a viable business. They were going to honor their contracts, but longer term, that wasn't going to work anymore. And, you talked about from the Cape, etc. The other thing too, and it's a big deal. I mean, everyone kind of, jokes about how much money the Canadian mills lost in the fourth quarter. That's not going to happen again. That is a one-off, third and fourth quarter. The numbers were so bad that I talked to one of the public majors, and he was adamant, and I don't necessarily know if I agree with him. He was adamant that any mill that makes less than 150 million board feet in North America has a target on it. Now, he may have been talking more about the public companies as opposed to, just everybody. But
there's public companies that make 150 million
there's a
board
serious
feet.
issue going on here. And I don't know how long these guys are, going to be able to hang on. Yellow Pine's making money. PNW's making money, not like not enough to ever build a sawmill again. And the Canadian mills, they're running out of rope. Honestly, they are. You know, Domtar's at what, 80%, taking shutdowns, Resolute, somewhat the same. I mean, you guys know better than me. Like, they are running out of rope.
I mean, the real thing is, you know, and this is what I always try to do is I try to say, hey, what is the market telling me? And what the market's telling me is we have flat demand, and we've had the flat demand now for 24 months. Demand hasn't really changed. What has changed? Supply has changed. And we've over the last 2 years, we've passed the tipping point of from production outpacing end-use consumption to end-use consumption outpacing the level of North American plus European import production. And through that process along the way, we've completely drained the pipeline. All of the excess inventory, Matt talked about this last week, excess inventory that this guy had here, or that guy had there, or this European mill was here, blah, 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 blah. That's all gone. That's all gone.
Mhm.
Every day that lumber gets consumed at the end user right now translates back to an order for production that isn't produced yet. And that's why if you look, you know, we traded for about 5 or 6 weeks very sideways during a period of seasonal weakness. And over the last week to 10 days, Matt points out, we're up $30 a thousand on the futures. If I look at my futures chart, it says we're going to 680 or 700. We're currently 620. So, you know, you're talking 10 to 12% higher than here. You know, that's all the visibility I have right now. Matt, Ash, and I were talking, I don't know, a week, 10 days ago. Man, you know what? We should just buy futures. And you know what? We sat back and we went, you know, that's just not our game. We don't have any forward book, nothing sold forward right now. And we have an all-in cash position. I did leave a few shorts on and said that I'm hoping I lose a lot of money on this because then that will just prove again to Montreal that hedging is best when you lose money on your futures.
You're gonna show them.
I'm gonna show them. Yeah,
Let me show you.
I mean, Matt, I can't even tell you. I mean, like the number of contracts I have is like it's you know, the market could rally $100. I wouldn't even notice it. It's that few contracts.
That sounds like a humble brag.
It is a bit.
There
you know.
What?
I mean, I mean, Matt, I stood on the chair last week and I went, you know, like totally talking position. We're all in max inventory position, balls to the wall. Let's go. I mean, I pushed up my peak price from mid-July to, you know, mid-August.
Yeah, I'm
waffling on that a little bit. I still think, I mean, there's this, I'm probably, if you said, hey, I think there's a 50-50 chance the peak could be mid-July or mid-August. It's 50-50 which one of those. And
this is a strange
year.
year,
see how things develop the next couple of weeks.
This is not the normal type of summer market that I'm accustomed to. Normally I'm ditching inventory in June. Prices are going down in June or July. You know, you get a little bit of a reprieve sometime in July or August when the mills get a little rally and it lasts for a couple weeks. And then it goes back down to, you know, kind of slows down going into September, October. And then you get your lows of the year sometime October, November, December. That doesn't seem to be happening this year. This seems to be the kind of year where everybody decided before the year started that they were not going to add inventory unless they absolutely had to. And a lot of the trading companies got burned last year with long positions that they made no money on or lost money on. And so they came into the year with, you know, lower, I don't know, inventory ideas, and their trading platform was maybe a little bit more neutral than
new
companies
they went to and worked for.
Yeah, I mean, like I told you guys back in the wintertime that I had several people canceling contracts with me for 2026. At the same time, I was increasing my personal contract commitments with the mills that I buy stuff from, because I knew it was going to be harder to find this stuff, not easier in the future. You know, for very many reasons. It's like the big one being that the tax is penalizing the Canadian production. And guess what? I'm talking about contracts with Canadian sawmills. So if you're in a position where you need Canadian lumber and you don't have some of it contracted, you're at a risky position this year. This is not the year that you want to, in hindsight, I don't think reducing contracts was the long-term play. I think it was a short-term play. But so here we are in June and markets are getting frothy again. Greg, I disagree with you 3 weeks ago. I was like, and I'm still hesitant to jump all in with you because of my experience and of my position in the market. I have enough wood bought to get me, where I want to go. But I'm not jumping up on the stool, shouting from the rooftops. I would love it if the market goes to those levels that you're talking about. I mean, I think that would make all of us some money, and it would make, the summer more interesting than normal, where you have upward pressure and people actually wanting to buy from you, needing to buy from you all summer long. That would be unusual. So, but I still have, like I said, I still have Western mills and some Eastern mills trying to sell me wood that they don't have the answer for, which blows me away. When I see what's going on out in the world, that there's still pockets. I mean, dude, I ran into this today. There's a Western mill. I'm not going to name names, but there's a Western mill selling whitewood 2x4 at $100 below what I'm selling it for. They're selling it cheaper than the number 3 or utility price by like $50. They're just dumping it. And I don't understand.
Need to turn it into cash.
I don't get it.
We like Ash and I ran into this over the last 30 days. We've had a couple of situations where we were like going, what are we missing when, like you said, guys came to us with stuff and said, hey, we need a home on X number of cars. What can you do? And, we're we routinely advertise as like, hey, we'll give you a bid on anything, any day, anywhere. You may not like it, but, we'll bid on it. Right. And we did. And, we kept getting hit. And I mean, to the point where, we talked about this last week in Buffalo is like, we kind of need to push the clutch in because the number of cars that we have going there. And I told Ash this morning, I go, God, you are a genius. You may be the best buyer that I've ever encountered.
You could continue.
Sucking up to the boss.
Not only are you a good looking man, you're a very powerful man.
And Greg didn't just hit the pricing or the sales bong this week. He must have hit the sales line, because he comes into the office every day. It's like, these cars just unloaded. I think, why haven't we sold those yet? I'm like, let's let him get on top of the sticks first here. Before it's okay. It's okay, but we got a good order file.
Let's go.
I want to ask Kip something here, Matt.
Okay. Yeah.
Last week we had a discussion, and it's kind of been rattling around in my head because it made a lot of sense. I can't remember the exact stat you said. I think between Euro coming in and Canadian, the loss we've had over the last X amount of years, I think you threw 30%. I can't remember the time frame you put. You said how much North American and Canadian and European fiber has come off, is coming off, relative to if we're at a flat market, like the demand hasn't fallen that much.
Yeah. Okay. So I think, so at the peak of COVID, I think this is what you're referring to. At the peak of COVID, the total wood available in North America was 62 billion board feet at the peak. And if everything continues the way it's continuing with European, which I think we probably can assume that that's not going to change now with, halfway through the year, and then they got to run it and ship it. And then the Canadian shipments to the US South is actually declining now. It has been for 3 years, kind of flat to decline, when we had that huge pickup, when the Canadians bought a whole bunch of US mills. And then the PNW has pretty much been flat for a while. When you put that all together, you're going from 62 billion board feet of North American production to either 52 to 51. So since COVID, that's what we've lost. And in sort of I've sort of talked to you guys about it before, but the big change to me, it's in the past, right? When guys have, like right now, West Fraser is kind of 80% on yellow pine. They're running at 80%. Could they step on the gas and make it 90? Yeah, they could. I mean, the logs are there. They might have to hire, Billy Ray and Cletus, but they could, right? But the big thing now that's changed in the past, when we've had the bottom of our lumber industry and things have turned around and either a supply or a demand pickup, is the 50% that is not making lumber is now becoming a huge problem. And we've had 25 pulp mills in the US shut, and there's more coming. And if you ever want to see when a pulp mill is going to shut, just look at the boiler. When the boiler has 25, 30 years, when that thing needs to be replaced, just like your dishwasher, it's $300 million. So if you own a pulp mill and your boiler needs to be replaced, you need to make a very, very big decision. $300 million. Yes or no? And that right now has been coming up in Canada and especially the US. And the choice has been no. And then your sawmill has got a problem.
You want to hear about another looming problem that I talked about last week?
Longview?
Yeah. Kip knows a lot about sawmills, everyone, just so we're setting the record straight here. Kip managed a sawmill, was vice president of sales for a sawmill, was vice president of sales for another big sawmill company. He's got extensive experience understanding manufacturing from the manufacturing side of things, not just selling lumber. And I think the people that work at Hampton tend to know a little bit more about sawmills and sawmill technology just because we have so many sawmills and we go through them and visit sawmills a lot. So you just sort of pick this stuff up over time. But one of the things that sawmills have to do in order to run is get rid of their residual products. That's all their sawdust, their bark, their chips, all of the stuff that comes off the log that doesn't get turned into lumber. It's either going to get burned or made into something else, or it's going to get chipped. The bad logs, the small logs that don't make it through, they get chipped, whole log chippers. That stuff gets sold. The byproduct is not just thrown in the river, right? It actually gets sold. And there's companies all over North America that will buy this byproduct. Well, the biggest one in the Northwest just had a massive explosion 2 weeks ago. And they're not taking any fiber from anybody. So where's all of the chips from? There's 10 mills within 100 miles of that plant, all producing hemfir and Doug fir. Where are they going to put their chips? Well, right now they're stacking them up, but their next option is load them into containers or put them into a ship hold and send them over to Asia for pennies on the dollar compared to what they would have got if they'd have kept it locally, right? And then there is no third option. The third option is you shut your mill down because you can't stack chips anymore. And so there's a real problem looming. And I had a discussion. I was visiting a sawmill yesterday. During lunch, this topic came up, and they don't have a good answer. And they're one of 9 other sawmills in the area that have no good answer. So not only are we going to have a bad forest fire season in the Northwest because we got 40% of snowpack, we've got a bit of a frothy market going on right now that Greg's been talking about for 4 weeks. And we've got these other things going on that are outside of our industry that have real impacts on mills being able to produce lumber. If you thought that the American West was just going to step right in and absorb all this extra Canadian wood that's not being produced, well, maybe that was true before this place blew up, but that's not true today, right? And the future looks cloudy.
Need deeper insights into wood products prices? At Fast Markets, we track over 1,600 price items to help you understand the narrative behind the data and market trends. Our team of experts brings years of institutional history to every price assessment and market report we deliver, From harvesting to housing, we cover every link in the supply chain to provide a complete picture of market dynamics. Use our forecasts and analysis to stress test your strategy and stay ahead of volatility in these critical markets. Stay informed and make better business decisions with Fast Markets. Go to fastmarkets.com/lumbertalk to learn more.
Yes, I wanted to talk a little bit about, about some demand side, some other things that were going on. I don't know if anybody noticed, but Berkshire Hathaway bought one of the bigger public traded home builders, Taylor Morrison, last week. There's been several Japanese investment houses that have bought some medium and smaller size, some private home builders, and kind of rolling them up. And so I just, I put that in my category of like, smart money buying, because the reality is, we've been at 1.3 million now. This will be like our third year in a row. So this is, kind of bouncing along the bottom on a demand side, right? So these guys are obviously looking down the road saying, hey, they're going to build more houses and they're going to have more pricing power down the road. I did see where existing home sales came out yesterday, better than expected, best number in a year, I think, which, is another one of these things that, given the backdrop, higher interest rates, although in the big picture, they're not really that high, the skirmish in the Gulf, all these other things that are swirling, it just kind of shows you how resilient our market is at this point in time. And I will highlight one other thing about, we talked about how multifamily is up a lot year to date after having been up last year. Single family's down a little bit. Drive around any town. I've been in, 3 or 4 different cities in the last, 60 days, and every one of them, multifamily, going up, like wherever you go, wow, look at that. Wow, look at that. I mean, even in our neck of the woods, Ash, we got it going out right down the street, right?
So, Greg, do you think Ron Howard will direct a movie on housing like he did the 80s movie called Gung Ho with the Japanese buying all the auto companies?
And I just wanted to make sure, like, so the viewers aren't like, confused. What Greg was talking about is Taylor Morrison. They're a home builder, not Ashley Madison. That's a home breaker. Don't get confused.
That's a good line.
Swipe left, Kip. Swipe left.
So, like everything I'm hearing is that, we kind of have a controlled burn to the upside right now, and it's, there are some items that, hey, 2x6s in general, Matt, you kind of hit it. Is it the same in U.S. species? Because 2x6s in spruce, 10-footers started ripping 2 weeks ago.
10s are good in everything right now.
We sold
everything.
10-footers at 700 picked up yesterday in the reload. And the guy countered me and I said, no. And he goes, do you have 3 of them? And 2x6, 104 and 5As. 2x6 16s. Now 12-footers are starting to take off today.
Yeah.
And I mean, what's going on with that?
What is 2x6, 104 and 5/8 Hemford, Doug fir now? Has that caught up to spruce at all?
I think it's still a little bit cheaper than spruce. The Doug fir is probably not, but the Hemford probably is. I mean, there's none available though. We put a couple cars out yesterday that that got sold like 6 times. So it's like
what kind of number? What kind of number was that? Chicago?
I don't know. I was visiting a sawmill yesterday, but I think it was probably in the high 600s. And I'm just guessing. I don't know 100% on. But the numbers that you told me on Eastern spruce last week were significantly higher, if I recall. That's why.
Yeah, and they're up another $30 to $40 a thousand this week.
I bet if Charles was on, he'd tell us he could do yellow pine for $200 cheaper. Remember that? We had about 6 months there where yellow pine 2x6 were like $180 cheaper.
And you probably still can do 2x6 9s in pine that cheap. But I mean, that's a niche market this time of year, nailing that stuff up.
And I wanted to ask Kip another question. I wanted to lean on his expertise on the CME side of things. When I look at the Commitment of Traders report, and I don't have it in front of me here, but if I look, there's like 4 major holders on the long side. It says like 45% of the position is held by like 6 traders or something. And on the short side, it's obviously a big. So we got the traditional big old industry longs versus the
fun shorts.
The fun shorts. What's going to give there? What do you see on the future side of things, Kip? Is this because I'm really amazed that it's kind of like, we closed that gap the other day. We moved up a little bit right now. It's just kind of keeping right with cash on the way up here.
Well, I can neither confirm nor deny on the long side, but on the
got a hunch, buy a bunch.
on the short side, in the past, and I think we've talked about it once before, is when the commodity funds have decided that the short side is not
fun anymore.
Play, and it could be interest rate. It could be involved in if the home builders are starting to catch a bid, and that the smart money tends to be there. We talked about Taylor Morrison, right?
Taylor Madison.
That's Ashley.
Ashley.
Don't get my name involved in that whole thing.
You got to get them right. You'll get a vastly different return on your Instagram. Trust me.
Yeah.
But you don't really know what it is. Maybe it's a hedge against oil. But when they start to cover, and they're clearly starting to cover now, it usually is $100 run, and they do not historically go from short to long immediately. There's usually a little gardening period in the middle there of where they've run it up, they've got out, they've taken their licking. And then when they do go long, that's when you get the $200 run. And just simply because of their size, right? I mean, they can put on 6,000.
Size matters.
Think about what we're saying.
We're talking Taylor Morrison, not Ashley Madison. But, it does lead to that potential for sure. And right now they're covering. There's no question. I mean, you can see them all.
I mean, open interest went down 330 yesterday.
Well, there's 1,100 trades today alone.
And you got more today. I would say with the RSI of 85 today, that short term, we probably put in a top. I would look to have like some sort of an adjustment correction between now and housing starts on Tuesday, and then make another run. If you're looking to get long, I mean, if the market drops back down in the low 600s, that's going to be a great place to buy, right? I mean, I think
it's below cash,
right? You're going to be below cash, and you're going to go, oh, okay, I mean, I'm not telling you that that's what you should do. You should consult your own financial advisor for sure.
Thank you.
For sure.
Well, with all the compression we've had,
this is merely for entertainment. This is just entertainment. We're just talking.
We've had 2 months now where number 2 and number 3 and utility have been within like $10 or $20 of each other. And then there was a period of time where premium was like another $10 or $20. So you've got 3
MSR.
grades of 2 before, right? All within $40 levels of each other. And just historically, that should swing back to wider spreads. So if utility and number 3 are firm at say 550 and 2 and betters at 560 and premiums at 580, those numbers should be more like 550, 600, 650, right? So we're starting to see that spring back effect on the 2 and better and the higher grades. But what we're really talking about, if you just was the last, 30 minutes of listening to Greg and Kip, is a potential $100 to $200 rally in the middle of the summer. And a lot of this stuff is things we have no control over, which is unusual. I mean, I'm not sure it's going to happen this way, but they're painting a pretty good picture for why it could happen and why something's happening, because something's happened already, right? We've already started to see a change, and I think it's the first or second inning. Greg thinks it might be the third. Well, that means we still got a lot of ball game left to play here, right?
Yeah, I mean, I'm kind of looking on saying is at what point over the next 30 days will there be something that like all of a sudden the market looks at and everyone goes, oh gosh, you know, and that we didn't know that was going to happen. But that's why, you know, like, I mean, buyers all need to have that aha moment. And that's when you're going to get, you know, that's when you get this, the scamper, the real feeding frenzy type of a market. I mean, I will say that in our world in the East, it's going to get really tight in July. And, you know, you don't want to be selling things that you don't have already in inventory because you're not going to be able to get them.
And Greg, like you,
is
I
that
heard
just because of the shutdowns?
Yeah, we're just, I mean, there's going to be, you know, the shutdowns are going to be more extensive this year, and they're combined with, you know, permanent curtailments that are just kind of winding, you know, starting right now.
And Greg, if you play the tape back here, if you're a buyer right now, like Greg said, I heard you actually talking to a buyer today about it. Hey, you haven't bought anything yet. You're not sure what to tell your boss. Play the tape back and you can say, oh, I didn't realize that there was a problem with that pulp digester or whatever out in, you know, Longview. And, you know, Kip I didn't realize all that extra inventory that's been taken off the market. I mean, we're giving you cover here so it's not your fault. And again, that's just an opinion. I could be wrong. So where could we be missing this, since we've basically grown horns out of the top of our heads and now the back of it also? Like where could we be missing here? What's the unknowns here?
Slowdown in consumption that we're not expecting.
Yeah.
That would be it. Because we know that the production is going to decrease over the next 60 days, right? That's just a fact at this point.
And one thing that it is, I mean, it is a possibility that the home builders view this as an opportunity to gain back some margin where they've had margin compression, right? Where they're giving incentives, you know, the average person is not paying 6.5% for a mortgage. You know, there's some incentive in there, especially the new home guys. So do they view this as an opportunity to not build more homes and just reduce the incentives if demand picks up slightly? That is a concern, right? Instead of, you know, 18% gross margin, we want to get back to, you know, 22, 23, and we're just going to reduce the incentives, but we're not going to build anymore. That's a possibility.
Yeah.
I mean, yeah, that's an unknown, right? We don't know.
No.
If the economy just ground to a halt all of a sudden, which there's no indicators of these things happening. So I'm just saying these are things that basically the only way that this market is going to unravel itself at this point, Ashley. I mean, at the very least, we just had 2 months of trying to run it through 570 down to 550 again, right? In the board. And it failed like 30 times. So that tells you something. That's a hard bottom number, that 570 level. When giant funds throw 6,000 shorts into the market and they can't get it below 570, now they're covering at 620. And they've done 1,100 of them today, right? And they're going to do another 1,000 tomorrow. So, you know, these are all fundamental changes that are occurring as we speak that are just naturally raising the angst level and the prices of two before, and really was kind of foretold by the compression that we were talking about for 2 months and the flat market conditions. You know, that's you got two choices. When you're flat for 2 months, you're either going to spike upwards, you're going to spike downwards. But there hasn't been anything in the wider market that has shown us that we were going to spike downwards, because we've been talking about consistent demand. So Greg, Ashley, myself, every day we come in, we've got lots of plate appearances, lots of guys looking for trucks, lots of guys looking for cars. You don't get every order, but there's plenty of inquiry around. Well, that's not a bad market. That's a fundamentally healthy market, right?
Liquidity.
Right. Yeah. You've got a downward market with high liquidity. That's still a good market. It just means that you have to take less for your lumber, but it goes away. The worst kind of market that we've ever been involved in, all of us, and we've been through these, is the low volume, low liquidity markets where people just won't even take your phone call. You can't get an offer from anybody, and there's just wood stacked up everywhere. That's no fun. Well, we're not even close to that. all the conditions in the United States are the exact opposite of that. There's low inventory, high volume, lots of opportunities.
So my question is, with all these, when Greg and I are short, we're short against cash that we have a position on. Don't care what so to speak, what happens. How can these funds? I mean, Kip, maybe you know better than I do. There are no Canadian mills making money right now, and I would say in the Pacific Northwest, probably few mills are making much money out there either, right? How can you sit there with that big of a short position on, knowing that your underlying producers that are producing a large chunk of this are $100, $1,000 offsides? I mean, or do these people just look at charts and they don't even look at that?
I don't think they would know. And I remember talking to a commodity trader friend of mine in London, and he was, part of his portfolio, he was short lumber. And I kind of said, at the time, why? Like, what's your thinking? And he said, well, what is it? Is it a ton? What's a contract? He had no idea. So if you think he knew what West Fraser is making or losing, no, it's part of a bigger picture. And to be fair, the last 3 years since COVID, being short, they've made a lot of money.
It's true.
And now they have to give some of it back. And the question is, and I think we're starting to see it, that they are no longer want to be short. And, to Matt's point, and I think whether you're a futures trader or not, if you are paying attention to the spread going forward, right, which you guys do because you're professional hedgers, if you're looking at that and it keeps coming in, and it has been nowhere near, I mean, I don't even know what it is a second, but
20.
I mean, it's how much, what is it?
I'm sorry, it's $6.50 for July SEP and $7 for July, November.
Yeah. So 6 months ago, you guys were hedging at $60 premiums. And now it's $6, which is not a premium. It's a discount because it costs you more than $6. So even if you're not involved in the futures business, a very good tell is watch that spread. If it keeps coming in, that tells you that people do not believe that the price of lumber is going to be way lower or way up, right? They just don't. And clearly we're seeing them covering. So they don't believe it either. Otherwise they wouldn't be covering at 620 when, Matt said correctly, we've hit 570. Why would you cover now? Well, there's a reason.
Yeah.
They don't believe it anymore.
Fear or greed.
Yeah.
That's what runs the economic world, right? Fear or greed. Right now, I think fear is running that decision. Certainly not greed, because it's a loss.
Yeah. It's a loss for sure.
But it's interesting that you're talking about spreads. I see that as we're transitioning into a market where the front month carries the premium. We had a wise man from one of the analyst companies come on the show here 4 months ago, and he predicted this. He said he thought that the spreads would go, basically to a flat or a discount as the year progressed. So he was about 4 or 5 months ahead of everybody else, predicting that back in January, I think. I forget his name, but he was a sharp guy. And it's now come to fruition. When's the last time, G-Money, that we had the front month running a premium to everything else?
It's during COVID.
Yeah.
During COVID.
4 years ago.
Yeah. Mm-hmm.
What does that mean, G-Money?
That'd be the definition of a bull market.
Yeah.
Yeah. Mm-hmm.
Maybe we've discovered something here through osmosis.
I'm all bulled up, boys. I'm all bulled up.
I think we're pretty much done. I think we've pretty much said it all, but we said it all. Yeah.
I will say that
Kip,
I appreciate you coming on last minute here.
Yeah, always great to have you on, and appreciate, you get some unique insights that, us guys that are like slinging stuff every day just don't pay attention to. So appreciate it, man.
Yeah. Great
to be on, guys, and great to see you guys.
Yeah, stay, be careful with that Ashley Madison thing you're working on. I don't know.
See you, boys.
All right, guys.
Take care. Cheers, guys.
Bye.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.